What's up, everybody? 360 in the house. We are going to do a quick video. I say quick, but you know how I like to yabber at the mouth, so it might be a little longer than quick, but we're going to do it anyways. So people in crypto have a tendency to forget. Yep, a tendency to forget. And so every single cycle, and this is, this is 3+ for me. We see the same things when it comes to FUD, FOMO, and the way people respond to markets. So what I'm going to do is, and a lot of you, this might be your first cycle, and you're probably absolutely terrorized. I get it. This is old hat for me. None of this is terrorizing. None of this shocks me. None of this scares me. This is crypto. While I believe the future of crypto involves a lot less volatility, that is not the world we live in right now. It's still new tech, new technology. And I want to make this very clear. I've said this 1,000 times. You cannot expect 500 to 1,000% plus returns without this type of roller coaster ride. And this is another reason why, and I've said this, I say this every cycle. This is another reason why very few make money in crypto. Because they allow these vicious, violent swings to shake them out, and they end up selling. And, the idea that, the principle is, well, I'll sell here and I'll buy it lower. But the same fear that caused you to sell it on a nasty drop is exactly the same fear that's going to keep them from buying lower. So it sounds good on paper, but human psychology is just not the way it works. So what really happens is they sell the panic drip, and now they're so afraid, they want validation after validation after validation that the market is indeed going higher. So instead of buying discounts, they actually wait for markets to not just go higher, but they actually wait for markets to go back to the old all-time highs and break the old all-time highs. So now they're buying everything that they had at much, much higher prices with far less money. Why? Because they took a mega loss. This happens, it's wash, rinse, repeat, happens every time. So the point of this video is I want to go back to show you that all of this has happened before. Yep, and I want to remind you of that. So what we're going to do, this chart right here is Bitcoin, and we have the 2017 cycle high, 2017 crash, the 2020, this is last cycles, 2020 cycle high, 21, and it's crashed. Now what we have right here is where we're going into and preparing for the next cycle. So I want to look at the space in between, okay? What I call the FOMO portions, the space in between. There's no FOMO portion over here. One, we can identify that there's no vertical move. This is not a vertical move. This is a trend, like trend move. We have your pre-ATH trend line here, pre-ATH trend line, verticality. Verticality, while it can start before, it doesn't finish or end until it's actually broken its old ATH. But the point of this is we've had false or artificial bull runs before the real cycle actually begins. So I want to go back to that here. So here you have your 2017 ATH, which was the climax, the finish, the finale, parabolic move, top for 2017, going right into your bear market. And then whoop, your real bear market dip right here. All right. You can see the similarities here. This time we have a double top, all of this being a distribution top. Okay. Not liquidity top. So no liquidity was left up here on the way that this formed. I want to talk about that in this video. And then we have it again here. So we have a 50% crash, a double top, and then the real crash. But then we have that drop off. So we have that drop off. So you can see the similarity there into the depth of their bear market, or the real low, the lowest of low, the actual bottom. Okay. But, and this is what I want you to see. We have, long before the halving, we have a rally that has everybody believing the bull market has begun. And to show you how incredible this was, this is a 350% rise on Bitcoin. 350%. All right. So the high was 20K. This actual run here actually took Bitcoin to 14K, and everybody thought the bull market, or the real portion of the bull market cycle, was back. And I'm going to show you this in altcoins as well. Okay, I'm going to show this to you in altcoins. So you have, I'm going to show this to you again. 341% return push on Bitcoin here. Look at that. 380%, 340%, 380%. On not the cycle yet. And we talked about early cycle. Remember, cycles end with this type of money. This is how they end. Okay, and that's up in this zone. This is how they end. Yep. FOMO money. That's how they end. All right, we haven't seen any of that yet. None of that has occurred. Why? Because we haven't hit the meat or the real portion of the bull market, which every time has been fall and winter and into the following year after the halving. That's why I have pointed here on the chart October to November, the year after the halving. And looky here. So what I want to show you here is the false bull run. The false bull run. Now it's still great. It's still a nice run. You've got that. But I want to show you how nasty that drop was. So you remember, you've already had your worst part into the bear market. Yet, even after this, look what happens here. This is a 72% drop for Bitcoin into a COVID drop. Everybody thought the end of the world was here. Apocalypse was coming. You're getting the same type of conversations right now about the economy. People just get apocalyptic. But you have a 70% drop. Okay? So you have your false pretense of, hey, the bull market started, your mega crash. But look how this lines up into your real portion of the bull market. Now, Bitcoin has had almost the same type of climb, only it is a much reduced dip for the moment. It's only 37% versus the 70%, holy crap, COVID drop here. So there's a reason why this is less intense for Bitcoin. We already know what those are. The supply, demand dynamic, and of course the spot ETFs. During this portion, on-chain data shows that there is heavy accumulation going on, not just with the Bitcoin spot ETFs, but with institutions, with nations. I've shown these to you time and time again. This is still occurring here. Okay? You don't see that at tops. Okay? When you hit these are distributive. Okay? They are always distributed. That means whales are dumping into every one of these peaks here. They didn't do that into these peaks. They haven't done so in these peaks. So, we've seen this before. Okay? This was much more pronounced on its dip. And we're still watching to see how this one lines up. But as far as when the real cycle begins, or where price really begins to deal with this whole time period here, is October to November. So this would be right up in this area. And we're pulled back here. October, November. Again, I'm going to pull this out and up. October, November. Yep. And we talked about early cycle theory being dead in the water. If you look at, we knew it was dead in the water, and I pointed it out to you when this occurred. No FOMO volume that occurs at every top, and the descent of volume. Where have we seen that before? Oh my goodness. Right here. Into this false bull market cycle. This was not the true portion of the bull market cycle. You have some heat up, followed by a dip. Back down. Okay? Versus the way an ending looks. Here's the way cycles end. Let me get rid of some of this. This insane amount of FOMO volume rallying, which is the same thing you see over here. Okay? You haven't got that. You haven't got that at all. So we've seen this before. All of this. We're seeing it again, and now timelines are lining back up. We're now post-halving. 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 Price is catching back up. Why? Because Bitcoin has been up here for 5 months. Bitcoin has been in this consolidation now pullback for over 5 months. And now everything, to include everything we're seeing with money and volume, is now lining up with normal 4-year cycles of Bitcoin. What does that mean? That means this goes well into 2025, just as every other cycle does the year after the halving. Okay? Here you have 2020. You have your peaks coming into March, and the second peak into November of the following year. Into November, or into the first peak was in March, April. The second peak was at the end of the following year, 2021. So we're in 2024. So that means we go knee deep into 2025, just as every other cycle would demonstrate. There's nothing different. Okay? We've pretty much gotten this again over here. Everybody forgot about this. Everybody forgot that we've seen this all before. We've been through it all before. Why? Because people were preaching the early cycle theory. Now, we had to watch the theory. We had to prepare for it, of course. Because in the event it was right, this would have taken off. Anybody not playing it would have been left behind. Yep, left behind. But when we got that drop, when we got no FOMO volume, and we got the drop off, for me, that was the end of early cycle theory. And now it lets you look at normality. Everything we've always expected from a cycle. Are there differences each cycle? Yes, of course. Tops look different. Here's a single top, here's a double top. How are we going to prepare for that? We're not. All we care about is this, FOMO. That's how we know when we're in the nitty-gritty, meaty portion of the bull market. All is well, all in order, and now we know what to prepare for. And we're already prepared, we're already ready. It's just a matter of letting the cycle be the cycle. Yeah! All right, until next time, here comes the boom.